It's about staying off the wrong side. Here's a congestion box we break out. Here's another congestion box. And it's the, hey, listen, I'm not going to tell you to be long, be short, but I'm going to tell you to be careful being long through this 0405 area. Why? Because it's the bottom of this box. Watch what happens when it starts to test it again. And before it tests, we go green and they blast out. We go green and gray right there. Red, white to green, gray. That's setting up for the market to go down. And that's the color you want it in order to go down. And then if I rewind this, you see the box forming. But I want to rewind it to where before, there it goes. So in real time, I am highlighting this box, telling where guys to be careful, short above or long below. And then you see the transition from red, white to green, gray. Too many longs, too many shorts. That premise. If you are focused on other people's position, OPP, you're worried less about what you're thinking and more about what the market's thinking. And your read has to come from what the market's thinking. The market's in a holy SHIT mode when it starts to leak through where it was comfortable staying in. And anybody long or short in here, which side is starting to say holy SHIT? The long side. The people who have open long positions start to see it leave the balance. Long positions, what? What are longs? Are they buyers or sellers to cover and exit that long position? Hopefully by now, you know for sure they're sellers. What does it take for the price of anything to go down? Sellers. And more of them, the faster it goes down. More sellers and plus less buyers, then you really could capitulate to the downside. I say this a million times and I'll say it a million more. I don't give an SHIT if it's the price of a house or car or anything else that has a price attached to it. Think about it. Focus on it. Stop worrying about what you think and start worrying about what other people are thinking. And this mess of psychology, this mess of emotion to predict price. Stop using price to predict price. Understand what that means and stop using it. And understand that unless there's a qualification and disqualification process, when it gets down to your zones, to your levels, to your ideas, then you're going to be less consistent. If you're just using the almighty support level where you think price is going to do this and then do this and bounce from it, and you're just going to work on better support levels and think that that's going to get you and keep you consistent, you're in for a rude awakening. Even if you got great, you're going to have awesome support levels just to stay around even. But you got to qualify and disqualify it because you're not just going to be able to buy that particular price. Then people have an area. Well, where in the area do you place your buy order? Above it, below it, in the middle of it? That's not going to be the answers to consistency. You got to qualify and look for something to get you in. And then that dictates what price within that area you end up opening a position, or maybe staying out of it when it slices through it and disqualifying a losing trade.